Good day, ladies and gentlemen, and welcome to the show. Listen, glad to have you here on this Monday, the 6th of July, 2020. Hope all you guys had a nice holiday weekend. I don't know, did they allow fireworks this year? I don't know. Up here in Canada, I heard a few going off, in the middle of the night, back around July 1st, July 2nd. But anyway, let's take a look at what's going on in the world. Let's get the charts open right here and take a look at this. This is a chart right here of COVID-19, and what we're looking at is the blue line. Let me see. This chart is so big. There, it's a little bit better. Uh, okay, the blue line is how many people are catching it. It's going way up. People are catching it like crazy, but the amount of people that are dying with it is descending and dropping rapidly. And what this basically means and what it kind of indicates to me is it looks like back around the middle of April, it looks like the virus underwent some sort of mutation. That's what it's looking like to me. Now, that's just me. I don't know. That's just me. But we see a separation here, or a divergence between the red line and the blue line starting at around, it looks like April, early May, the divergence here. Maybe May, the 1st of May. We see a divergence here between the red line and the blue line. And this would be an indicator possibly of some sort of mutation where the virus has become less virulent meaning it kills you, virulent, and more contagious, meaning that it's easier to catch. And that's why we would see a divergence in these lines. Other things could cause a divergence in these two categories: the category of people dying with it and the category of how many people are catching it. So a lot of people are catching it right now, but they're not dying with it, which is a good thing. And it kind of points to me. I'm thinking to myself, hey, mutation. That's what I'm thinking. And that's the natural way for viruses. Why they would mutate that way is because if the virus mutates to become easier to catch, in other words, more transmissible, then the virus survives better. And that would mean that the surviving virus is the one that makes it, in other words, and it doesn't kill the host. And that's the natural progression for a virus. If a virus is going to mutate, most likely what it'll mutate into is something that is less virulent and more contagious. Because it survives if it doesn't kill the host. And that's what it's looking like here. It's looking like it looks like some sort of mutation, something that's less dangerous, something much less dangerous. But that being said, an awful lot of people are still getting sick with it, and it's probably it's like I say, probably those early figures that I did where I crunched the numbers on the calculator, and I saw around the end of August or early September, that it was going to probably peak. I'm still thinking that that's probably correct. And that we'll see this blue line peak and then start to descend off. And of course, this red line, the death line, will really go down big time. It's already going down, but I mean, it'll really drop off, Anyway, let's move on to other stuff. Let's take a look now at the silver price today. This virus has taken our country, North America, right to the brink of civil unrest, of all kinds of massive problems, that could arise very quickly. And it's not over yet, because we got the financial consequences now to deal with that are going to linger for a while. And one of the financial consequences might be silver itself, because, these mines have been closed for a long time, and there's going to be a gap coming. And that gap takes about 6 months to hit. In other words, the silver mines and stuff, they close up, and that doesn't hit the supply chain for about 6 months down the road. They're going through the silver that they mined out of the ground 6 months ago right now. But then they're going to hit this sudden gap, probably in a few more months from now. And that gap will be no silver. And if that comes at the exact same time that demand skyrockets for real physical silver, we could see a massive shortage in silver. And I'm going to tell you, we could see prices go through the roof if that actually happens, because these companies and things out there, companies that make things like cell phones and all your electronics and everything else, they rely upon silver for production. Now, what if the economy starts to speed back up about 3 months from now? Then we're going to start to see massive inflation. People are going to say, hey, I don't want to keep my money in dollars. I want to invest in something else, and the economy's starting to heat up. It could be creating the perfect storm for precious metal investment, quite seriously, and this is a golden opportunity that might only come along once in a lifetime. So we're looking at a silver price today of $18.19. Now let's take a look at gold and see what it's doing. We're looking at $17.82 for gold. And it's up $7.70 on the day. Now let's take a look at cryptocurrencies. Looking at $269 billion. Now let me refresh the page. 268.9 billion. With a Bitcoin price of 93.18 today, it's up 3%. It was getting down close to the $9,000 mark, but it's picked itself back up just a little bit again. It's starting to move. And you notice that we seen a burst of energy come into gold and silver this morning, and then we seen the same burst of energy come into Bitcoin. You notice that? It's moving with gold and silver. More and more I've been noticing that lately. Let's take a look at the Dow Jones Industrial Average. It's up 326 points on the day, or 1.26%, 26,153. And I think most of the energy now is out of this rally. This rally could still very well turn out to be a dead cat bounce. If we sit here and we take a look at the 5-year chart, and well, the 5-year chart shows it, but we see that big drop we had, and now we've rallied up. We haven't rallied up to the old highs yet. That could still turn into a classic dead cat bounce. And, is the market really taking into consideration what's really happening in the general economy? Half of the people in America are out of work, but we got a stock market that's going up 300 points today. The two things don't fit together, The whole reason for this market going up so good was Federal Reserve stimulating measures, But after a while, that's like a drug. It wears off after a while, And we're in that point, I think, now where most of the energy from that is come into the market. Unless they want to do more. If they want to do more, the market can go up higher. But at this point, does the Fed really want to do more unless they need to do more? And so we're in this position where the market's been bloated on that cheap, easy money. But it's tentative because the Fed might not want to do more. And if they don't do more, the market's going to start to fall. So now that the Fed stepped in to support the markets, they have to continue that support endlessly. Okay, let's take a look at crude oil today. $40.62 on the day so far. It's down 3 pennies, which is nothing much really. So crude's staying about the same today, and that's sweet light crude. Let's take a look at U.S. Treasuries. And what we see here is yields rising all the way across the board except for the 1 month. We're looking at a U.S. 30-year at 1.45, up 2 basis points. And we're looking at a 10-year at 0.69. It's up 2.3 basis points today on the day so far. Now let's take a look at the U.S. dollar index. 96.79 on the U.S. dollar index. And the dollar is down ever so slightly. It's been slowly dropping today, the dollar. So there you have it, folks. Thank you for tuning into my show this morning, and I really appreciate having you guys here. And stay tuned. We're still in this watch. We're still keeping our eye open for a precipitous drop in this market. Anything much could trigger it at this point, because the Fed is actually sitting on their laurels. They're thinking to themselves, hey, we don't need to do more. But we got an economy, probably the biggest problem we got out there in the economy, aside from the structure of the whole way it's put together to begin with, is the 50 million people that are out of work. I mean, we've never seen anything like this before. What's the ramifications going to be? Because a lot of these jobs are not coming back. I mean, some of the jobs might come back. I mean, if we're lucky, maybe half of the jobs will come back. But still, it's going to leave a giant gaping hole of 25 million people without jobs, even if half of the jobs come back. And what are you going to do with 25 million people that don't have work? I mean, that's still worse than the Great Depression. And that's if we make a recovery. Okay, listen. Thank you guys for listening. We'll catch you in the next show. Bye-bye.